I am totally looking forward to this week, this trading week, guys, because we have a lot of catalysts coming up. Nothing on Monday, December 11th, nothing for tomorrow. So definitely watch out for a potential chop day. Market tends to chop leading up to a big data release, okay? So just hopefully it doesn't chop. Hopefully I'm wrong. I'm not one of those those YouTubers that wants to be right all the time. Hopefully I'm wrong. And we don't chop tomorrow, but just something to be wary of. And then December 12th, CPI and core CPI coming out at 8:30 a.m. That should cause some reaction, okay? And then PPI on Wednesday. But the big thing I'll be watching for is FOMC, the interest rate decision, um, at 2 o'clock, 2 p.m. Eastern time. And then 2:30 is when Jerome Powell speaks. You guys know when Uncle Powell speaks, ooh, the market tends to move. And then some more initial jobless claim, unemployment data. Got a lot of catalysts coming out next week. If you guys been complaining about, some weak price action, I'm hoping with all these data releases, these catalysts, it will get the market emotional. And when the market is emotional, the market tends to be volatile. And that's what we need. We need an emotional market so we can trade this level to level unbiasedly, like a sheep. Now, gotta talk. Speaking of animals, we gotta talk about the elephant in the room. Um, Guys, as you guys can see here, that it looks like the double top has been canceled. The double top has officially been canceled. Is this the beginning of the next leg up? Okay. So before I continue, guys, I want to remind everyone Uncle Charters is a sheep. That means I cover the bull case scenario and the bear case scenario to be prepared, because I am not looking to predict. I am looking to react to the price action, and I need to be prepared and open-minded to either scenario. Okay? A lot of people who, especially new viewers, keep watching my videos thinking I'm either bearish or bullish, and they don't watch my whole video. They only watch part of my video, and then they want to make a comment and comment based on partial information. It's a very terrible thing to do, but people do that. So please watch the bull case and the bear case and understand my mindset and approach is not to react with a crystal ball, but to identify levels and setups and scenarios so that we can react unbiasedly to the price action. All right. False breakout setups, we enter puts. False breakdown setups, we enter calls. Play it level to level. Okay. No greed approach. Some people like it, some people don't. It's not for everyone, but it's definitely for me. And if you love the sheep style or a fan of the sheep style trading, level to level style, definitely hit the like and subscribe button. I greatly appreciate it. So yeah, double top was around the July high 459.5-ish. And guys, we had a close last Friday at 460.2. So technically speaking, the double top is canceled as of right now. So now we got to wonder and be ready for the next setup, which I'm going to talk about, okay? But before I do, I want to remind us on the rising channel and what triggered this move up to give us the cancellation of the double top. You guys can see here the market was chopping or consolidating since mid-June, and it came in the form of a rising channel. Okay, you guys can see a multiple tests of the support line, multiple tests on the resistant line. Okay, when the market enters consolidation mode, or as I like to refer to as basing, because it's building a base, it comes in the form of, it can come in the form of rising channels, horizontal channels, bull flags, bear flags, wedges, many different patterns and structures that the market can form. And we had, based on this rising channel, a breakdown, if you guys recall, breakdown back on last week in around December 6th. And I mentioned, hey, this breakdown combined with the double top, it's pretty bearish, excuse me, not bullish. It's pretty bearish. And then in that same video, I covered the bull case and the bear case based on the setup. And I mentioned how we had a double bottom here at the 453.5 level. And if that level broke down, that would have give us the bearish follow through that we had from the breakdown of the rising channel. And then I mentioned for the bull case, if we recapture the rising channel, we want to switch back to being bullish, or at least cut loss, or whatever situation you guys were in. But that's why it's so important to know the levels, because we got to also know not just when to take profit, but also know when our trade is invalidated and we got to cut loss. Can't hold on to it egotistically. So the point I'm trying to make is the market was building liquidity just below the support of the rising channel. They went stop loss hunting only for them to give us a false breakdown setup. We don't fully know it's a stop loss hunt, but the false breakdown setup definitely gives us, from a price action perspective, and that it is a stop loss hunt. So the price action with the false breakdown setup tricked out the bears, making it a bear trap, and then it just pushed right back up. So all the bulls who may have tried to long off of this support line, they got fucked over when that trend line broke down. And all the bears who tried to short that breakdown got fucked over when the trend line got recaptured. That's what the market does to cause us, the retail traders, maximum pain. They are not our friends. Okay? And once they faked enough retail traders out, that's when they tend to make the move that they really want to move. Does that make sense, guys? This market is very trappy. Even in the trend phase, it can be trappy. And if you've been following Uncle Charles' channel long enough, something that I have preached is to be a trap trader. What does that mean? It means to always identify the traps and trade with the traps. And how do we trade with the traps? Identify using the false breakouts and the false breakdown levels. And in order to identify those setups, you have to know the levels. And which is the levels that I try to give you in all my videos for free. I don't hold nothing back for the most part. Okay? So I want you guys to take the lesson that I'm trying to give to you guys and try to apply it, because it's something that I still, am trying to do every single day. Is ask yourself, who was the last person to get trapped? Which animal was the last animal to get trapped? Was it the bulls or was it the bears? And this is stuff that I wrote about in the Discord, but hopefully you guys hear my voice talk about it. It can click a little better. But always ask yourself in the morning, who got faked out or who's getting faked out? The bulls or the bears? So when we saw the gap up back above 456, we was watching for one of two scenarios. If the market was going to break back below 456, 456.5 zone, we would have switched back to being bearish. Why? Because yes, it was a gap up, but it's probably trying to scare some people, but it's dropping back below the rising channel. That would have had us bearish. Instead, it pushed up higher, not officially losing the rising channel, and it closed above July high. It even closed above December 1st high. Double top is canceled. So I hope you guys are understanding my concept, my trading concept on the trappiness of the market, the trappy nature of the market, and how they set us up with that rising channel, building liquidity. So now the question is, what is the next setup to watch out for, Uncle Charles? Well, you guys know that we had a double top. That means there was potentially liquidity above that 459.5 level. which is likely that it got hit last Friday. So if the stop losses all got hit, and it is the market maker's intentions to fake out the bulls and push the price back below, these are the levels and setups we need to watch out for. Okay, this is the bear case, then I'm gonna cover the bull case. Please watch both. So 459.44 was the July high that broke out, double top cancel. So if we break back below 459.4 and my 458 level, you guys know I had a 458 level, it's potential that we got a big double top here, guys. A false breakout setup here, guys. And if we get that false breakout setup, that's bearish. So if we break back below 459.4, 458, 456.5, I would be bearish, putting 455, 453.5 back in play. Remember the double bottom at 453.5. Potential liquidity below there. So if market wants to trick people out, they could push the price low, below 453.5, go stop loss hunting there, and then see what they want to do next. If they stay below 453.5, despite already stop loss hunting, then obviously it's going to continue to be bearish. But if they push below 453.5 and then recapture it, then that is a liquidity grab, false breakdown setup, and we could potentially head back up higher. You guys understanding? Trading with the traps. We're trading with the traps. Okay? So overall, bear case scenario needs to start with the breakdown of 459.44 and 458. That could give us a sign that the market maker just went stop loss hunting, and they're likely going to push it higher. Now, if the market makers keep price above 459.4, that is overall bullish, guys. Okay, here's the bull case scenario. Please watch. As long as above 459.44, I recommend to stay bullish. And I have a bunch of resistant levels up above, okay? Now, if you guys been watching my videos, you guys probably already have my resistant levels up above, okay? 461, 463, 465, and all that happy stuff. But let me zoom out here and talk about the critical level that we could potentially hit. As you guys see here, I got this big old, what is that, a bear flag? That's a pretty big bear flag that I have here. Connects from October 2022 low and October 2023 low, okay? That's 1 year apart. And then the resistant is from August 2022 high to July 2023 high. That's almost 1 year apart. Now, a third test of this bear flag resistant would be all the way up around 471-ish. Okay, that also happens to be my 1.236 Fibonacci extension level. Okay, that is a potential level that could get tested and bears could possibly step up there. Okay, guys? But that's only possible. Listen to me. I look to react. This is not a prediction. Please stop putting words in my mouth. Please stop interpreting my information how you want to interpret it, and instead interpret it how it actually really is. Okay? Uncle is a sheep. And this upside move is only possible if 459.4 defends as support and clear more resistant level, 461, 463, and so on. Okay, guys? So, let's keep it simple for tomorrow and the rest of the week. 459.44 is my equilibrium level. Above it, bullish. Below it, bearish. Okay, guys? Now, here is triple Q. Triple Q, oh my God, look at that big old island. The big old gap up, and it's a big old island. The only way, based on this setup, that triple Q would turn bearish is if we get an exhaustion gap. Now watch out for that. Watch out for that. Triple Q would need an exhaustion gap. A gap down at the open, like a big gap down. Alright? An exhaustion gap. Maybe we'll get it as CPI. I don't know. But we can also get a gap up and just continue this uptrend and just keep going higher, because look at that, it's overall looking bullish. It just broke out a consolidation zone that I have here. Okay, triple Q, as long as above 391.5, I would stay bearish. I would like to see a breakout of that 394 level, 394 was Wednesday's high. If it breaks out, I would favor more upside. 396, 397.5, and 399-ish. That would be targets. 399 is around my 1.236 fib level. Few says 398.75, but I think it could hit 399 if it goes up higher. Only possible if Triple Q could stay above 391.5. Okay, I've been using the 388 level as support, as a critical support level or equilibrium level to watch because it was July high. It's been tested well enough and it's been recaptured with a false breakdown setup. So with this false breakdown setup, it's got to push up higher, all right, and stay above 391.5. Otherwise, if we drop below 391.5, 390, and 388, guys, I would switch back to bearish. And if we get an exhaustion gap down, I would be very bearish on the Triple Q. Okay, but as of right now, RSI is not overbought. It's a good chance Triple Q could go higher, but remember what I'm saying. It has to stay above 391.5 for it to be possible. Below it, not ready to go higher yet. Okay, guys. Let's next. So I want to cover that's DIA. I cover IWM. That's a weekly chart. Oh wow. The weekly chart on IWM is almost touched in my downtrend line here, my white downtrend line from all-time high, connected to July 2023. Just a few cents shy off of it. That will be about around 189 189. So basically, if IWM can clear 189 next week, that it's in breakout mode. That would be very bullish on IWM with 191, 193.5 and higher in play. But overall, above 189, I would be bullish on IWM. It would be breakout mode. I'll switch back to bearish, and if we can break down support levels, starting with 184.6, 183, 181.5, and 180. Those are support that needs to break down for IWM to be bearish. But otherwise, overall, above 189, breakout mode, I would be bullish, all right? Tesla, looking at a 15-minute chart here because I've been trading Tesla a lot lately. Overall, it's still bullish. I mean, not bullish, choppy. I'm getting my words mixed up, guys. But yeah, overall, it's still choppy. Got it in, what is this? A rising wedge. The breakdown is at 238.5-ish. 238.5 breakdown, I would get bearish on the Tesla. Now, if it could clear some resistant levels, 245.5 and especially 247, it will put my blue downtrend line at 250 and play. This downtrend line, it's definitely something to watch. It started from July high, been keeping Tesla in a downtrend. So above 250, downtrend could be possibly over, but the next big test would be the top of this rising wedge, which is around 258-ish to 260 zone. So above 258 to 260, I'll be a lot more bullish on Tesla. All right, guys, but to test those higher levels, 245.5 and 247 must clear. 247 is a fib level and 250 is the downtrend channel. Above that is bullish. Yeah, like I said, below 238-ish, it would be bearish because it would be a breakdown of this pattern and we could start the next leg down. I'm talking about a swingable trade, guys. Apple, I mentioned in my last video, was watching this megaphone pattern. Well, it broke out the megaphone pattern, broke above 195. So as long as above 195, higher targets are in play. 197, 198.2, and 100 are upside targets. And remember, the rally usually ends when we get a false breakout setup. So we need a breakdown of support. 195 to break back into this megaphone pattern and possibly down to 193.4 is to cancel this buying pressure here and to trigger a move down much lower. 191.2 is the fib level, so below 191.2 I would be bear bias and favor a test of the megaphone pattern, the support of it, which is all the way down at 186s. Okay, that could be a nice move to the downside, but it got to start with breaking down support. Otherwise, stay bullish. Let me go to the daily chart on NVDA. Yeah, NVDA broke out of a downtrend. I had this downtrend that I was watching. You can see it better on the smaller time frame, like a 1 hour and 4 hour, but overall, still same concept. I mentioned to you guys as well that I had a, you know, let me go to a 4 hour. It looks better. Yeah, I like it better. Yeah, I mentioned how I had fib levels from November 21st high down to December 4th low, and we cleared that 23.6 fib level, which is at 464. I mentioned to everybody on the YouTube channel for free that as long as above 464 to stay bullish. And look at that beautiful move to the upside, going as high as 477.4. So I'm hoping that you guys made some. I'm hoping you guys made some money, man. This is a lot of work. Uncle been doing a lot of crazy stuff in the Discord covering the market, and it's a lot of work. Some people appreciate it, and I appreciate you guys too. And some people don't like it, which is it is what it is. No hard feelings. But I'm hoping you guys make money because that's the point of all this. Anyways, that 38.2 fib level was at 472.6. We also cleared that. Okay, I am bullish on NVDA still, as long as above 472.6. All right, we got some decent selling pressure at 476 and the 477.5 level. If those levels clear, 479.5 and possibly up to 483.6s, maybe higher, are in play. Okay, but overall, the point is stay bullish above 472.6. If we're going to switch back to bearish, look to short below 472.6, support 471, 469, 467. 465.5 and that 464 level back in play. Please add my levels to your chart. Stay bullish above 472.6, and you can switch back to bearish and favor a pullback below 472.6. Okay, that's our equilibrium level. Okay, here's Amazon, still chopping, consolidating, working. It's still within the megaphone pattern. But overall, if it can stay above 145 and 146.5, we just need that breakout of 148, and we could likely go test the top of the megaphone pattern at 151 plus. Okay, I'll switch back to bearish below 145, and especially below, let me see this pivot level around 142.6. A little buying pressure there. Yeah, if that fails, I'll switch back to bearish. 142.8 actually. 142.8. Yeah, below 145 and 142.8, I would be bearish in favor of pullback on Amazon. But overall, if we can get that breakout 148, I would long it in favor 151 and 152.3-ish in play. AMD had this weird pattern. You guys can see this weird pattern. Let me know what you guys think this pattern is called. It's like some variant form of an expanding triangle, but I have this green line here. You test here, higher high, higher high, higher highs. But the lows are relatively the same, okay? I'm not sure what this pattern is called. It's some type of variant of an expanding triangle or something like that. But that's the structure and pattern that I'm watching. And to break it out, it needs above 130. Okay, break above 130 to put higher targets in play. 131.5 and 133 would be the levels I'll be watching. All right, now to get bearish, I would, as usual, watch breakdown of support at 127, 125.5, 125, and of course 122.2. It's same levels. If you break it down, I have the buy zone all around 116.5 is actually. So I got to update my levels based on what the price action is showing me. So yeah, 116.5 is a strong buy zone. A lot of bounces there. So below 116.5, that's when I would switch to being bear bias on AMD and cancel all that buying pressure. Okay, otherwise watch for that breakout of 130. Let's see what happens. Okay, Meta, strong recapture, strong false breakdown setup, the greatest trade setup of all time. Recaptured at 326.2 is level. I had a level around 321 as well. Recaptured 321, 326.2. Almost coming close to testing this orange downtrend line started from November 22nd. Okay, a breakout would be above 334. That's a critical level to watch. 334. If it breaks out, look to long with higher targets in play, guys. All right, I do got 338.4 and maybe even higher up to 340 and 343 plus would be targets up above. Okay, if we're gonna switch back to bearish, it gotta be breakdown and support. 330, 328, and 326.2 are support. If they fail, then we can look to short and play it level to level. 321 and 315 would definitely be targets to the downside though, okay? Netflix, we broke down its critical 78.6 fib level at 455 back on Wednesday, December 6th. Friday, we back tested as a resistance. So if Netflix recaptures 455, I'd be bullish, look to long. If Netflix rejects from 455 and break down support around 450ish, look to short. Could be a big move to the downside. 144 could be a target, maybe even lower, okay? Google's been struggling here. Overall bearish right now, below 138. All right, follow through would be to break down 135.5 and 134 and fill that gap around 132.8ish, okay? To be bullish, it just needs to break above 138 to trigger more upside. Long above 138 if it happens, all right? Let's see. What am I missing? Microsoft. Someone asked for Microsoft. MSFT. I feel like I'm missing something. Anyway, so I got fib levels from Microsoft. For Microsoft, so July 18th high. Down to September 28th low. All right, and it gave me all these fib levels. Fibonacci extension level. You guys can see here, based on this high back in July, we cleared it back in early November. Recently back tested it as a support. And looks like it's successful, guys. All right, it looked like a higher low is in play here, okay? So if you can break out 374.5, that's the level to watch. 374.5, I would be bullish in favor, more upside, maybe up to 377ish and 380ish. Above 380.3, 384 would be a target, and man, above 384s would be new all-time high, okay? I would switch back to bearish as usual when support fails, starting with 371.5, 370, 368, and 366.5. Please add these levels to your charts, people. Because if those levels break down, Microsoft could be putting in a lower high, setting up another trend that's could be an ABC correction to the downside, maybe even to test this uptrend line. Okay, and if we break it down, bears obviously take back control. All right, guys. What am I going to end this with? Darkpool. This is for the last week, December 4th to December 8th. The most activity we got was actually right at 458.3-ish. That was about, 4.9 billion in premium around that for this week. It's a pretty good amount. Also had the most recent one was around 460.2 and 460.19. One was 1.6 billion and one was almost 700 million. All right, so those are levels to watch. Interesting. What is market makers doing? What are they doing? Are they pushing the market up? Are they selling? Are they taking profit? What are they doing? We shall see. We shall find out. All we're doing is looking to react to the price action. Now, it's showing me a lot of SPX. I'm not interested in XPX. I am interested in the SPY. And it is bearish right now. Bigger money's going into puts right now, guys. Gotta be careful. Could be that another one of those stop loss hunting thingies. Triple Q is bearish. IWM is bearish. Tesla is bullish. More quantities of calls and more bigger premiums for calls. Okay. Apple is bullish. NVDA is bullish. Amazon. Bullish. No. Wait a minute. It's bearish. More 8,000 calls, but bigger premiums, bigger money went to put. So it's bearish. Almost got me there, Amazon. AMD is bullish. Meta is bullish. Netflix is bullish. Google is bearish. Google with the L is bullish. What the hell? Google with the L is bullish, but Google without the L is bearish. So make it make sense. Am I missing? I feel like I'm missing something. Microsoft. That come out. Oh, Microsoft 100% bullish, guys. Holy moly. All right, that's it for now. Thank you guys so much for watching. I appreciate you guys so much. Good luck this week. Remember to trade with the traps. Be a sheep. Bye. And if you want, join Uncle's Discord. I'd love to serve you there. Peace.